Goldman Sachs is now in crypto. Meanwhile, Tether has released a report basically proving that their Tether is back. And at the same time, Iowa House bill approves to legalize smart contracts. There's so much going on right now. Ladies and gentlemen, this is your Digit Hustle News. Welcome back to another episode of your Digit Hustle News. Ladies and gentlemen, we're going to start with the biggest story, of course. Goldman Sachs is now going to be offering Bitcoin and other digital assets to its very, very wealthy client list. In short, the bank is aiming to offer investments in emerging asset class in the second quarter, according to Mary Rich, who was recently named Global Head of Digital Assets for Goldman's Private Wealth Management Division. Goldman is looking at ultimately offering a full spectrum of investments in Bitcoin and digital assets, whether that's through physical Bitcoin, derivatives, or traditional investment vehicles. Some Goldman clients feel like we're sitting at the dawn of a new internet in some ways and are looking for ways to participate in the space. Guys, one thing I keep noticing everywhere I look is that they keep comparing this time to the internet, to the dot-com bubble, to the emergence of the tech industry. And I strongly agree, because this is that time, ladies and gentlemen. But diving in real quick, Goldman Sachs is close to offering its first investment vehicles for Bitcoin and other digital assets to its clients of private investors. The bank aims to begin offering investments in the emerging asset class in the second quarter, according to Mary Rich. Her promotion was scheduled to be announced Wednesday in an international company memo seen by CNBC. We are working closely with teams across the firm to explore ways to offer thoughtful and appropriate access to the ecosystem for private wealth clients, and that is something we expect to offer in the near term. Goldman is looking to ultimately offer a full spectrum of investments in Bitcoin and digital assets, whether that's through physical Bitcoin, derivatives, or traditional investment vehicles. This basically means soon, clients of two of the world's most preeminent investment banks, Goldman Sachs and Morgan Stanley, will have access to a nascent asset class that has intrigued billionaires and digital currency believers alike. Ladies and gentlemen, that's the reason why I started with this first, because of that sentence right there. The clients of two of the world's most preeminent investment banks, Goldman Sachs and Morgan Stanley. I talk a lot about legacy corporations on this channel, guys. And if there are any two bigger than Goldman Sachs and Morgan Stanley, then point them out to me. Besides the BD group, which we won't go that much into, but there's nobody bigger. And now they're about to allow their wealthy clients to get access to a full spectrum of investments and digital assets. So let's keep in mind, guys, let's keep the puzzle pieces close. Let's keep them together. This week, we've already had Visa coming in with Ethereum. Then the following day, PayPal. Okay. So institutions are rolling in, guys. And those who have gotten in early, even if you've gotten into crypto just this year in Q1, you are in the prime time, because this summer, ladies and gentlemen, it's going to be very bullish, and it's going to be for a couple of reasons, starting with the fact that the Senate, the government is slowly laying the basis, the foundations, ladies and gentlemen, for not only the number of smart contracts technology that will be used in the next economy, but stable coins. start focusing on your stablecoin bags, ladies and gentlemen, because that is what is going to essentially replace the fiat dollar, the physical paper dollars. So a lot of platforms like Apple and other exchanges allow you to hold your stablecoins and get at 8 to 10 to 12, 15% in some places back on your holdings. So we're going to get into that into the next piece. But first, we're going to look at these smart contracts because the Iowa House approved a bill to legally recognize blockchain smart contracts. The bill would give legal recognition to transfers and registrations made through blockchain smart contracts. Simply put, ladies and gentlemen, a smart contract is now just as legally binding as your signature on a piece of paper. Evidence right here that we are in the new economy. There is no more we're going to it. We're here. Because on March 29th, the Iowa House of Representatives passed a bill that seeks to legally recognize transactions and registrations made via blockchain smart contracts. The bill, titled SF 541, gained Senate approval earlier in the month. So, ladies and gentlemen, while we were seeing one thing, this was happening behind the scenes. And it would explain why I didn't come with as many videos this week, because when the visa thing hit, it made me very aware. I went into alert mode because shiny object syndrome is what I felt like was happening. Shiny object syndrome, because at the same time, while I'm doing my research and I'm reading, I'm seeing a lot stable coins, governments, bills being passed. This is one of those. So going forward, under the auspices of the new bill, smart contracts will be given the same legal status as regular contracts, while distributed ledger technology will be viewed as a reliable electronic store of record. Regarding smart contracts, the bill states, the bill provides that a smart contract shall not be denied legal effect or enforceability solely because the contract is a smart contract or contains a smart contract provision. So, real life scenario, how this will be used very soon. You go and purchase a home. If you go through a blockchain real estate company and they're out there and you execute the transaction, you receive a smart contract back in your email address. As long as you have that file, that smart contract file, that house is forever yours permanently. No one, with the exception of the issuer, maybe, depending on how the contract is written, can touch that. Permanent ownership. Now, the bill states that any registration of rights or ownership would not be invalidated by its broadcast on a blockchain network unless the transaction was related specifically to the transfer of the rights in question. A person who engaging in or affecting interstate or foreign commerce uses distributed ledger technology to secure information that the person owns or has the right to use retains the same rights of ownership or use with respect to such information as before the person secured the information using distributed ledger technology, unless in connection with the transaction with terms that expressly provide for the transfer of rights of ownership or use with respect to such information. I love how they word these guys, but simply put, like I said, if you execute a smart contract transaction for property, if you go to buy a car with it, if you go to get a house with it, or book a flight, or whatever the transaction is, it's immutable. There are no more refunds. Simply put, guys, with smart contracts, there's no refunds. There's no refunds. And now, as of March 29th, it's official. This is how we're doing it. The bill gained approval of the House without contest. No contest on March 29th. With representatives voting 94-0. Earlier in the month, the bill made it through the Senate with similar ease and passed with a vote of 47-0. So, ladies and gentlemen, that can show you that the government interest is fully behind digital assets and cryptocurrencies. Further proof that we are headed in a digital direction. Now, before we close, just want to leave you with this Tether information. Tether releases an assurance report that shows its stablecoins were fully backed all the way up to February. Tether has released an assurance report delivering by accounting firm Moore Cayman that shows that its stablecoins were in fact fully backed. The report is dated February 28th and has an assurance opinion by Moore Cayman that Tether's consolidated assets exceeded its consolidated liabilities as of the date. Tether has released the report shared with the block by Tether on Tuesday is dated February 28th and has an assurance opinion by Moore Cayman that consolidated Tether's assets exceeded its consolidated liabilities. Specifically, Tether consolidated total assets amounting to nearly $35.3 billion as of February 28th, and its consolidated liabilities amount to $35.2, of which $35.1 were related to the stablecoins issued. That means Tether's reserves exceeded the amount required to redeem the stablecoin issue per the report. So, simply put, guys, this is just basically news on Tether reporting their finances. This is the final result. Okay, so this is going to be a regular thing. This is their response to the New York Attorney General's actions that we saw last month. So, with this coming into play, Visa, ladies and gentlemen, essentially using USDC. They've already tampered Tether. USDC was already in their pocket. Okay, you have DAI over in Asia, that stable coin. Tezos is coming out with a stable coin, and then you have Pax Gold. Stable coins are going to be very important this next phase, guys. This next phase. I really think so. But before I let you go, just want to let you guys know to stick around for the end of the video, because I'm going to have a couple clips for you about some information regarding two stablecoins. And I feel it's going to be very informative. So be sure you stick around for that. But as far as the news goes, that's all I got for you right now, guys. Okay, so don't forget to hit that like button. Don't forget to subscribe. Thanks you for coming back to the channel. It's April 1st. No fool though, even though MM Crypto got me this morning talking about selling all this Bitcoin. That guy's he's hilarious. You guys check him out. But yeah, anyway, guys, thanks for coming back to the channel. Of course, you can always get down at me in the comments section, as well as on social media at Digit Hustle 2021. Also, if you want a decentralized alternative to YouTube and you want to earn some free cryptocurrency, make sure you check out Library. The link is down in the description. As well as Pipeflare, guys, it's how I support independent blockchain video game developers, which we all know making video games is hard and it's not the most lucrative in the beginning. So doesn't cost anything to support, and you get to earn free cryptocurrency in return. And I'm telling you, earning free cryptocurrency won't last much longer with all of these major players coming into the space. But that's all I got for you guys. Make sure you stick around for that last clip. It's got some pretty powerful information about stable coins, and I'm going to insert a little snippet of the Goldman Sachs interview that went mainstream concerning Goldman Sachs. But yeah, you know what I'm going to tell you guys. Have a great day. Have a prosperous day. But most importantly, make that money. I'll see you in the next.
Goldman Sachs is getting close to offering Bitcoin investment products to its wealthy clients. Hugh Son joins us now. Does Goldman know Bitcoin was like $4,000 like 18 months ago, and now it's like 57,000? This is part of their expertise. Hugh?
Well, Joe, I think those dizzying charts that everybody is looking at and salivating over, that's one of the reasons why Goldman and others are getting into this. You know, they are in a client business. So when clients of Goldman Sachs or clients of Morgan Stanley, you know, call up their financial advisor and say, should I have an allocation to Bitcoin? Look at what it's done. You know, should I have a 1%, 2%, 3% allocation to this emerging asset class, they've had to say, well, as a firm, we can't really recommend that. Well, that changes, and that changes very, very soon. So as we report exclusively on CNBC.com, Goldman Sachs is very close, and in the second quarter will begin offering Bitcoin and other digital asset-related investments to its private wealth management clients. This is sort of the Tony private bank of Goldman Sachs. They really target people and endowments with at least 25 million in assets under management.
Yeah, I understand, and they probably do see the demand now, but they are supposedly are known to be the smartest, the savviest, one of the best firms at analyzing these things, Hugh. And it's just taken a while. I mean, guys like Andreessen or even Paul Tudor Jones or Druckenmiller, this is. They are so far behind the curve on this, and that's fine that they finally are coming around with it. But you see my point. Wow, thanks. Maybe it's an asset class at 58,000. Thanks for that, Goldman.
Well, Joe, they are of the belief that we are still at the very, very beginning stages of this new nation asset class. And if you think about it, it's a little more than a decade old. So when you look at the investment banks, they are at the nexus of overlapping regulatory regimes. They're not. They obviously have a higher threshold given their role in the last financial crisis about getting into new and speculative asset classes. So it's easier for hedge fund managers and the like to plow into this. It is, however, more meaningful that a Goldman Sachs will pierce that barrier and be one of the very first investment banks to say, what, we legitimize this asset class. We think it's not going away. There's a future to this. We don't know what the future looks like, but we know it's going to exist in the future, or we believe it's going to exist in the future. And I think that's the news today, Joe.
Hey, Hugh, when Morgan Stanley made this announcement, and I think there was a bit of maybe even a misunderstanding publicly about what they were doing. Morgan Stanley was not allowing the investors to effectively invest directly in Bitcoin, meaning you were not buying actual Bitcoins. You were buying instruments, funds, Grayscale, and the like to get into it. In the case of Goldman Sachs, are you going to be buying directly into the cryptocurrencies themselves, or are you going to be buying instruments which creates a middleman? Maybe Goldman's creating the instruments themselves.
Yeah. Well, and Morgan Stanley, just to be more specific on that, Andrew, nice to be with you, man. Specifically, Morgan Stanley talked about investing in Mike Novogratz's Galaxy Digital funds, and I do believe that's a fair close approximation of actually owning a physical Bitcoin, as they call it, closer than Grayscale, which is a trust, and the price moves around a lot. Obviously, there's a gap between the physical and the trust price. Now, specifically with Goldman, and I encourage people to read the story, but look, they say that there's a full spectrum, and these are the words of the executives I spoke to, of exposures that they're thinking about, not just physical Bitcoin, as we call it, but also derivatives and also traditional fund investments. So I think they're looking at it very holistically. They think that still, despite what Joe said, that they are still early in the game, and that in hindsight this will look like very, very savvy move on their part.
They very well might be early. There's people that talk about you divide the 21 million into a certain percentage of the global financial system, you get numbers like 500,000 and a million. That's not my point. My point is just that they may be early, but they're not as early as so many other people. And you can see today, Hugh, it would normally Goldman Sachs, the endorsement of Goldman Sachs stocks or the Bitcoin's down 2%. So it moved more, I guess, when some others on the way from 4,000 or 400 up to where they are. But this is a major event for Goldman in a white shoe investment bank to sort of give the endorsement there, Hugh. And we appreciate that. Good story.
Bitcoin has become a popular mainstream investment, but it's also known for its volatility.
You don't know if in a week's time the value will be 20% lower, 10% lower, 10% higher.
Its value fluctuates so much that few people would use it to buy everyday goods such as shampoo or a plane ticket. Some crypto entrepreneurs say there's one way to change that: stablecoins.
This is a really interesting one.
USD coin, or USDC.
Stablecoins are different from other cryptocurrencies in that they are pegged to assets like the US dollar or gold, which is meant to make them more stable. They've grown particularly popular among traders online. In just a year, as Bitcoin hit new records, the market value of stablecoins has grown tenfold. Facebook has announced plans to launch its own stablecoin, and Visa said it would create a stablecoin credit card. But a probe of one stablecoin exposed some potential risks with this system.
It's Tether.
The New York Attorney General had accused Tether, the most popular stablecoin, of lying about the cash reserves it uses to guarantee its dollar peg. Tether did not deny nor admit wrongdoing as part of a 2019 settlement, but agreed to release quarterly statements detailing its reserves. So can stablecoins accelerate the adoption of cryptocurrencies in our daily lives, and will they change the way we pay for goods? According to its creators, Bitcoin was meant to allow direct payments without ever going through banks, but so far it's been accepted by few companies, with very few high-profile exceptions like Tesla. Market analysts found that Bitcoin's price has at times jumped or crashed by as much as $6,000 in a day, but that hasn't been the case for stablecoins. In the past year, the value of top stablecoins has fluctuated by as much as 4 cents to their $1 pegs.
You can have reasonable assurance that in 3 months' time or 6 months' time or 1 week's time, it'll still be worth $100. And that's what was missing in crypto before stablecoins came along.
Alex Kern is an analyst who researches stablecoins and other cryptocurrencies. He says the first stablecoins were created as early as 2014.
The 24-hour trading volume is often over 90 billion. Bitcoin is a little over 50 billion. So it trades more often than Bitcoin.
Tether was pegged to the US dollar, and more than 200 other stablecoins followed. Some pegged to the euro or to the Korean won, others to commodities like gold, silver, or oil, or a combination of different assets. On top of stability, stablecoins like Tether have another key advantage: speed. Because this is digital money, transactions go through in a matter of seconds, faster than the 3 days it usually takes to wire US dollars or euros using traditional banks. Stablecoins are also faster than Bitcoin because the payments are centralized and managed by the company that created them. For example, Tether transactions are managed by the Tether platform, while Bitcoin payments are processed by a vast decentralized network of people called miners who are spread out all over the world.
It's instantaneous. There's no settlement process that needs to occur.
Only a handful of e-commerce websites accept stablecoins at the moment. But crypto traders have quickly adopted stablecoins like Tether to buy and sell cryptocurrencies online. That's because stablecoins don't run on normal banking hours. Compared to stocks that have to be traded in locations like New York or Hong Kong during specific hours, cryptocurrencies are traded 24 hours a day, 7 days a week, all across the globe. Plus, academics who study the role of cryptocurrencies say some banks have been wary to interact with crypto exchanges due to the lack of oversight in the industry and concerns that they could be exposed to illicit activities like laundering money or funding terrorism. Binance, one of the largest cryptocurrency exchanges in the world, said it is committed to creating a compliant, safe, and reliable trading environment, and it asks users to follow all local laws on money laundering and counterterrorism financing. In 2019, the New York Attorney General accused the companies managing the stablecoin Tether, also called USDT, of making false statements to investors about the cash reserves of its currency, an essential component of what makes it stable and secure for investors. The crypto community online discussed the probe and Tether's dollar backing.
If you go to their website right here, it says every Tether is always 100% backed by our reserves.
Which sounds very much as if $1 US went in and a Tether was printed in return. It's so simple.
The investigation found that in 2017 and 2018, Bitfinex, a cryptocurrency exchange that has common ownership with the company that controls Tether, relied on a third-party company named Crypto Capital Corporation to handle deposits and withdrawals on Bitfinex's trading platform. The New York Attorney General's office said that Crypto Capital Corporation failed to process some of these orders, and Bitfinex lost access to $850 million of its customers' money. Crypto Capital said it couldn't process Bitfinex transactions because in 2018, its bank accounts in the US, Poland, Portugal, and the United Kingdom were frozen without justification.
Naturally, this significantly delayed fiat withdrawals from Bitfinex for its users, which started to suspect something was up.
The New York Attorney General's office said Bitfinex tapped into Tether's dollar reserves to cover up the losses, and afterwards lied to its customers when it said its currency was fully backed by US dollars at all times. During the course of the New York Attorney General's investigation, Tether said it held 74% of the necessary reserves, which some investors considered to be enough to make the digital currency secure.
This is perfectly common in modern banking, in which only a fraction of bank deposits are backed by actual cash on hand.
As part of a settlement with the New York Attorney General's office, Bitfinex and Tether Limited paid $18.5 million in penalties and stopped trading activity with New Yorkers.
This is finally coming to an end.
Bitfinex and Tether said the amount of money they agreed to pay should be viewed as a measure of their desire to put the matter behind them. The firms did not admit or deny any wrongdoing. Industry insiders say this investigation should be a warning to all companies that created stablecoins and to expect the stablecoin industry to be more tightly regulated in the coming years. Some companies are already looking towards a future of using reliable virtual money as payments. Visa announced a stablecoin-based credit card and said that making its digital currency strategy secure, private, and trusted is a key priority. Facebook's new cryptocurrency project, Diem, aims to create stablecoins pegged to different fiat currencies. Diem says the system is being built with security in mind. Some countries are also working on what financial analysts call the next iteration of stablecoins, which would be a digital currency pegged to the national currency and controlled by central banks. But before this type of digital money truly goes mainstream, Kern says its creators and issuers are going to have to convince regulators and users that their technology will keep their money safe.
It's going to be very important for people to trust the entity that's issuing the stablecoin. And the one that has the most trust of people over a period of time will be the one that becomes the most heavily used.